Continuing on with our example then for George, we've done in the previous session looking at the journal and recording the double entry and the dual effect for George. What we now need to do is record these transactions in the ledger accounts. Now what we're going to do is record them in the main ledger. Now the main ledger sometimes can be referred to as the general ledger or sometimes referred to as the nominal ledger. But we'll use the terminology main ledger as that is most commonly referred to in the exam. So what we can see then in our notes is now what we have is we have a set of blank T accounts or ledger accounts. So you can see there that you've just got the bare bones of the account, the T. What we have to do is have a ledger account or a T account for every different type of asset, liability, income expense and capital. So, if we refer back to the journals that we've just did for George, we can see then that our first journal was on the 4th of April, where we said we were going to debit cash at bank account and credit the capital account. What we've done there is we've created two accounts, cash at bank and capital, and they needed a separate ledger account each. The cash at bank account appears in the statement of financial position along with assets, liabilities and capital. So what I'm going to do at this point is remind myself that the financial statement it's going to get put into is the statement of financial position. And remember, when I talk about a statement of financial position, I abbreviate it to SFP. Now, along with the name of the account at the top, we also need to state the debit and the credit side. Remember, debit on the left, credit on the right. So, on the left-hand side at the top of the account, we put DR, debit. And then on the right-hand side, we're going to put CR, credit. So, debit and credit, drive on the left, crash on the right. Now, we said that the other account we had was capital. So you can see in your notes that the second blank ledger account, well, we're going to use that for capital. And remember, capital is an item that appears in the statement of financial position. So again, I'm going to remind myself that ultimately the balance of this account will go to the SFP, the statement of financial position. Don't forget, we also need to write in DR for debit on the left and CR for credit on the right. Now we have those accounts written in, let's proceed to pop that journal transaction into those ledger accounts. So we have three columns on each side of the ledger account: the date, the narrative and the amount in dollars. So for our cash at bank account, let's write those headings in: date, narrative, and then the amount in dollars. So three columns. That's just on the debit side. We now also need to do the credit side with those same three columns, and we shall head them up: date, the narrative, and the amount in dollars. So let's post transaction number 1, the journal, into those ledger accounts. We said we were going to debit cash at bank with $50,000. So on the debit side, the left-hand side, the date, 1st of April 2009. The narrative will always be the name of the opposite account that you're posting. Now, we're debiting cash at bank account. The corresponding credit entry, well, that's going to capital. So the narrative will be the capital account. Okay, so we're posting the opposite credit entry to capital, but we're writing that in there just so the bookkeeper can trace the double entry to make sure it all works. The amount we said was $50,000, and that's what we're going to pop under the amount, the dollar sign. that is it. The debit entry is posted. So essentially one side of your journal is now complete. And if you wouldn't mind, if you go back to your journal, what I like to do to keep a track of the transactions that I've posted to ledger accounts, I always like to give a little tick next to that transaction to show that I've posted it. I want to do it for this one, but you can do the rest yourself as you're following along. Now we need to post a credit to the capital account. So $50,000 I'm going to tick off, and I'm going to post that journal to my capital account. So if we go to our capital account, I'm not going to write the headings again because you can see the headings. It's not necessary as long as you're posting those 3 bits of detail in. So on the credit side of the capital account, we're going to pop the date, the 1st of April 2009. We're going to post the name of the opposite account where the debit entry is going to, which was the cash at bank account. Now, because I don't have a lot of space, I'm just going to write bank there. But that is obviously the cash at bank account where the corresponding entry has been posted. Now, let's put in the amount, $50,000. Okay. The debit's been posted to the cash at bank account, and the credit's been posted to the capital account. Okay. So essentially the hard work has already been done in the journal, deciding what is a debit and what is a credit. The physical posting of it, well, with a bit of practice, it should be fairly okay to have a go at. Let's proceed to do the rest. So with transaction number 2 in our journal, we said that we were going to debit purchases and credit our payables liability. 2 new accounts. Therefore, for each account, we need to open up a ledger account for it. So let's do that then. Moving on then to another blank ledger account. Name of the account, we're going to do purchases. And we're going to have a debit and a credit side. Remember we said purchases was an expense. Now which financial statement does an expense go to? That's right, you guessed it, the statement of comprehensive income. You remember I abbreviate the statement of comprehensive income to SOCI. S-O-C-I, SOCI. Okay. That's going to be useful when we prepare our financial statements later on. So, our other account was payables, so we're going to do the same again. Debit on the left, credit on the right, and then we're going to open up an account called payables. And in that account, remember that payables is a liability, and a liability goes into the statement of financial position, shortened to SFP. So we're going to write that in as little reminders to ourselves for later. Right, now we've opened the accounts, let's post the journals. We said it was on the 2nd of April, and we're going to debit purchases account with $5,000. So, the date, 2nd of the 4th, 2009. The narrative, we said that was going to be the name of the opposite account, which is payables. Remember, that's where the corresponding credit will go. And then the amount, $5,000. Okay, so we've posted the debit entry to purchases, increased that expense account up. Now let's have a go at payables. So moving down to payables then. Credit payables, again with that $5,000. So, on the 2nd of April, 2009, our opposite account we said was going to be purchases, because that's where the debit entry went. And again with the amount of 5,000. So journal number 3 then, what we said we were going to do is debit cash at bank and credit sales because we made a sale in cash for those goods. So I'm going to tick off my journal transactions and then I'm going to post them to my ledger accounts. Now we already have a cash at bank account that we are now again debiting. So we need to go back up to our cash at bank account. Note that we have our first transaction already in there. We're just going to add to that now. So with my third transaction on the 3rd of April 09, I'm going to debit my cash at bank account with $6,000. And remember, the name of the opposite account, we said the credit was going to sales. So the narrative would be sales. There we go. So hopefully you're starting to get the hang of what we're doing here at home. So we've done our debit to cash at bank. We don't have a sales account though yet for our income, for our sale. So we need somewhere to post that credit entry. We're going to need to open a sales account. So, new account. Okay, so new ledger account. We're going to call this sales, debit on the left, and a credit on the right. Now, we also need to establish the financial statement. Sales is income. Income gets reported in the statement of comprehensive income. Remember, abbreviated to the SOCI. Okay, so I'm just reminding myself there. Let's post a credit entry. 3rd of April 2009. The corresponding debit went to cash at bank. We'll just call it bank for lack of space. And what we'll do is we'll post the amount there, which we said was $6,000. So again, there we go, 3rd transaction posted. Our 4th journal transaction. Well, with this one, we said that we were paying off our liability, paying our supplier and paying off that payable. We said we were going to debit payables and reduce down that liability, and then credit cash at bank to reduce down our asset. Well, we already have a cash at bank account and a payables account, so no new accounts need to be opened up in order to post this transaction. So, let's go. Go back to our payables account. And we said with our payables account that we were going to debit it with $5,000. So, we're going to look at the date, 4th of April 09 on the debit side. Our corresponding account will be cash at bank, and that's going to be with the amount that we're settling, $5,000. Can you all see then that the debit side of payables and the credit side of payables, they both have $5,000 on them. They both balance. At that moment in time, that suggests to me, looking at this ledger account, that there is nothing owed to any payable liabilities. Excellent. So, we've debited payables. That account has now effectively been cleared. Now let's do the credit to cash at bank. And we said with cash at bank, on the 4th of April 09, our narrative will be payables with our amount, which we said was, again, 5,000. So there we go. Transaction number 4, done. We're halfway there. Let's do the rest. Going back to our journal. Transaction number 5 then. We said what we were going to do with that is debit our rent expense account and credit our cash at bank account. So we paid an expense by cheque. So again, make sure you tick off those amounts. $450, we're going to post them to the ledger. And going back to our ledger accounts, our debit entry will go to the rent expense account. We haven't opened that account up yet, so let's do it now. So just after our sales account, we're going to open up a new T account called rent. And again, just noting the debit and the credit entry. Rent then, remember, is an expense. An expense gets recorded in the statement of comprehensive income. So again, we'll just write SOCI there to abbreviate that down. Let's post the double entry then. Our debit entry, we said, was for rent expense. So the date, the 5th of April 09. Our opposite account is the bank account, and $450 is the amount posted on the debit side of the expense account. Let's do the credit to cash at bank. That was our first account that we opened up. So in this account then, on the credit side, to reduce down that asset, 5th of the 4th, 09, opposite account is the rent expense account, and 450 is a credit entry for that. Okay, so hopefully you're getting a feel for this now. Let's do the 6th transaction. Transaction number 6, then, we said we were going to debit receivables assets by $6,000 and credit sales income with $6,000 as well. Remember, receivables is an asset because we sold those goods on credit. A customer is paying us later. Okay, so we've done session and transaction number 6. Now let's have a look at transaction number 7. Looking back at the journal, we can see then that what we said we were going to do is debit purchases and increase that expense by $7,000 and credit payables, the liability, by the same amount of $7,000. Both of those accounts are already opened up. It's the same transaction as transaction number 2, so all we need to do is post it in the same places. So ticking them off then, if we go back to our purchases and payables ledgers, we can see then that with purchases on the 7th of April 09, the corresponding account is payables, $7,000 on the debit side to increase that expense. Now if we do the corresponding credit entry, looking at payables on the 7th of April 09, our opposite account is purchases, and we're going to credit that with $7,000. And there we go, transaction 7 complete. So our final transaction then, our final push, okay? What we need to do now is record transaction number 8. And with transaction number 8, remember we purchased that delivery van for $7,000 cash. We said that we were going to debit motor vehicles assets with $7,000 and then credit cash at bank with that same amount of $7,000. So we're going to tick those two amounts off, and now we're going to go back to our main ledger, and we're going to need to open up the motor vehicles asset account first of all. And this will be our last account that we need to do. So just under the receivables asset account, debit on the left, credit on the right, motor vehicles, as I've already mentioned, is an asset. An asset appears in the statement of financial position. And we're going to debit that account with that $7,000. 8th of April 09. Our opposite account is cash at bank. $7,000 is what we would debit that account. Now, let's go back and do the credit entry. Remember, we said that was going to cash at bank, our first ledger account. So on the credit side, 8th of April 2009. Our narrative will be motor vehicles, and our amount, $7,000. And there you have it. We've completed the ledger accounts from the journals. Remember, the journal is a written instruction to the bookkeeper to update the ledgers. Well, that's what we've done. We've updated the ledger, the main ledger. So our next topic will be to then balance off these accounts, and that will be in our next recording.